Do you ever wonder where all your income goes and why you sometimes come up short at the end of the month? If so, you may want to consider making a personal budget. This strategy can give you more control over your finances and make it easier to save money and pay off debt. When it comes to creating a personal budget, it can feel like there are a million financial categories to consider. In order to create a successful budget, everything should be accounted for, from large expenses like your mortgage and car payment to smaller expenses like your gym membership and Netflix subscription. The first step in better budgeting. Your first step is to document how money is coming in and going out every month. Start by tracking your income and expenses for 30 days to get the full picture. Consult your bank statements, receipts, and credit card statements for records of all expenditures. Now that you can see where your money's going, you can build a realistic spending plan going forward. Calculate your total monthly income from all sources. To start budgeting your money, you'll need to first figure out your total after-tax monthly income. Some potential income sources include regular hourly or salaried earnings, self-employment income, child support, government payments, and investment earnings. Checking pay stubs, bank statements, and other documents will help you identify these earnings. As you add these items, you might encounter challenges with certain income types. For example, your self-employment income could vary widely from month to month based on the season, or the number of hours you worked may fluctuate. Identify fixed and variable expenses. Once you have a clear picture of how much money you're actually working with each month, it's time to figure out how you're spending it or how you should be spending it. There are two main types of expenditures you need to account for as you build your budget: fixed and variable expenses. The difference between the two is that fixed expenses tend to cost you the same amount each month, while variable expenses vary. Determine your discretionary expenses. Discretionary spending budgets are designed to be for anything you want, but you would not necessarily say that you need. This 30% of your after-tax income should cover non-necessities such as entertainment and travel and can be considered your fun money. As you take a hard look at your spending, you may find that you are spending a lot more on non-necessities than you think. It is important to cut back and eliminate those. For example, maybe you need to cut back to eating out only one night a week as opposed to multiple nights a week. Set budgeting goals. Have some short and long-term goals for budgeting money so that you know how to allocate extra cash. Perhaps you'd like to build an emergency fund to cover unexpected expenses, or a savings fund to pay for an upcoming wedding or vacation. Some longer-term goals could include saving enough for your children's college or your retirement, or paying off all your debts. Fixed expenses. Your fixed expenses like rent payment, groceries, transportation, and healthcare costs are likely to absorb a large chunk of your budget, which makes them all the more important to track as the months go by. To determine how much of your budget is going towards fixed expenses, start by creating a list of your regular expenditures. Types of budgets. Your success in sticking to a budget largely depends on finding an approach that fits your style and situation. Here are 3 common budgeting methods to consider. Traditional budgeting. This approach organizes spending into categories based on fixed and variable expenses and budgets a certain amount of money for each spending category. For example, dedicate a certain amount of money each month for groceries, gas, and entertainment. Track your day-to-day expenditures in each category, and once you reach your limit, either stop spending in that category or transfer funds from another category. Reverse budgeting. This method is also known as paying yourself first and prioritizes savings or other financial goals over spending. With reverse budgeting, you allocate money at the top of your priority list first, then work your way down. While learning how to budget money better takes time and practice, gaining better financial control and achieving your financial goals make it worth it. By having a budget, you'll better understand how much you earn and spend each month so you can work on changing detrimental spending habits. Good budgeting habits can also help you eliminate high-interest debt, saving you money in the long term. That's all for today's video. I hope you found our video interesting, and don't forget to subscribe to our channel and press the bell icon for latest updates.